Hey everybody, Andre here at SeeWhy Learning. If you're in the process of renewing a mortgage, you're going to want to watch this one because it could potentially save you a lot of money. Now, at SeeWhy Learning, we're not in the business of offering independent, financial advice to students. That's not what we do. We're an exam prep company. That being said, what you learn in our programs can absolutely help you in your day-to-day financial lives. And like I said, potentially save you a lot of money. Now, I'm in the unfortunate position where my mortgage is coming due and, I'm going to have to renew it. And as you all know, I'm sure you've heard or you're experiencing or aware that interest rates are at a peak as far as recent history goes. And we're all hoping rates don't go up, but, I'm praying that they go down. But again, a lot of us have been surprised by how quickly and how fast rates have gone up. So it's that kind of environment and my mortgage is coming due. Now, I personally think in the next year or two, interest rates are going to go down. Again, nobody knows, but that's my personal, prediction. And as a result, I'd like to take a 1-year mortgage and not lock in for 5 years. But what's making it more challenging is right now we have what's known as an inverted yield curve. Now, normally, we call it a traditional yield curve. Normally, the longer the term, the higher the rates. Well, right now it's inverted. The 1-year mortgage rate is actually higher than the 5-year mortgage. And if you're taking the Canadian Securities course, you're probably familiar with these terms. So if I want to take a 1-year mortgage and hope and pray that in a year when I got to renew again, rates are lower than, I'm going to have to pay a premium this year because, again, the 1-year rate is higher than the 5-year rate. And the reason why I wanted to shoot this video is I know everybody, when they're renewing a mortgage, obviously you consider interest rate. It's very important. It impacts the payment. But one thing I think that, some people renewing their mortgage might not be aware of or may overlook is if you're locking in for 5 years, you really have to ask yourself, am I going to stay in that term for the entire 5 years? Now, if you move, you can usually port the mortgage to another property. That's usually an option. But what if a couple years down the road, you need to sell the property? Maybe you can't hang on anymore and you're going to sell the property and rent or whatever the circumstances may be. If that occurs in a couple years, and if interest rates have gone down substantially, you could be looking at a gigantic penalty. Now, we don't talk about this often because in most environments, when you pay out a mortgage early, you're usually looking at a penalty of 3 months interest, which isn't chump change, but again, it's not enormous. But like I said, if you lock in for 5 years and in a couple years you need to pay it out for some reason and rates are down a lot from where they are now, here's how your penalty could look like. Here's some quick math. Let's assume it's a $500,000 mortgage, which I would argue is quite typical today given house prices. It's a $500,000 mortgage. Let's say the interest rate differential is 2%. Rates have gone down 2%. They've gone up 5, so it's possible. So 500,000 times a 2% interest rate differential times 3 years is $30,000. If you got a $750,000 mortgage, a $1 million mortgage, that penalty is only going to be bigger. So I'm not suggesting you don't lock in. I'm just saying you need to be aware of that as well. Yes, interest rate is important. The term is also important. The features of the mortgage are important. But if you're locking in, you always got to ask yourself, am I going to stay in this mortgage for the entire term? And if I don't, what is that penalty potentially going to look like? This is something I would discuss with your lender, in conjunction of, the entire mortgage package. Now, if we get enough traction on this video, enough likes, comments, etc., we can certainly put together a video where we go over the 2 different types of, penalties a borrower could pay when breaking a mortgage early, because as I always say to people, knowledge is power.